direct versus guaranteed of the USDA loan, and what are the differences that we're gonna put for you. Differences, 12 differences, no?
But first, let's hit it. Hi, this is Alan Victoria. Welcome to our channel.
And if this is your first time in our channel and you wanted to know everything about Greenville, North Carolina, please subscribe on our channel, get notified, and also gives us thumbs up and supports our channel.
Okay, also, we get phone calls, texts, emails all the time from people looking to move, shift, relocate to Greenville, North Carolina, and we love helping people, so don't be afraid. We're nice people. At least I think we're nice. So anyway,
yes,
let's get into it.
Therefore, the first item, what is the first item?
Guarantee versus direct. The number one item is, first of all, you can go to guaranteed loan. You can go to USDA loans.com and it will connect you to a local bank in your area that does guaranteed loan. The first one we're going to talk about was, and that's actually should be in number 13 for a difference. But the first thing we're going to talk about, the guaranteed one, is a 30-year term, a traditional 30-year term. The direct loan, which you get from going to your local USDA office, if you're in the local Greenville area, we can certainly hook you up with that application as well, where to get it, I should say. And then this one goes 33 to 38-year term, so it's a lower payment because it's a longer term.
Therefore, longer term is the first one between these two. The number two,
what is it? What is it? You tell me.
Basically, with the direct loan, no?
The size, no?
Yeah, the direct loan basically that you go through your bank.
No, the guaranteed is what you go through the bank. Just
guaranteed is going to the bank. Okay.
You can have any size you want, really, as long as it's a regular size. And you can have a swimming pool. People think you can't have swimming pools with USDA. With the guarantee loan, you can have a swimming pool. Direct.
With the direct, no swimming pool, also less or equal 2,000 square feet. Therefore, you have a limitation for the direct one.
Right, it has to be a modest size, so it has to be under 2,000 feet, which, let's be honest, that's a pretty decent size anyway. But you can have a pool, so no pool there. All right, what's the next one?
Therefore, next time is the term of the pre-qualification, no? Therefore, how long is going to take pre-qualification for the direct loan?
Direct loan, okay, it's a little bit longer. It's going to take your office 10 days just to pre-qualify you, and then it can take up to 3 months. It can be as little as 10 more days or as long as 3 months, depending on your local office for that pre-approval.
Because you are applying through the government, don't forget that.
So it depends on the fast processes of the government, but during the pre-qualification phase, which in the first 3 days, they will tell you what documents you need. And then it can go up to 10 days for the pre-qual. And then once you do all of that, then you go into the pre-approval letter, and we will have a different video on pre-qualification versus pre-approval.
Exactly, that you can watch here. And then for the guaranteed, basically it depends on your bank.
Yes, going
because
to the bank.
We said for the direct is up to 90 days, for the guaranteed depends on your bank.
Right, so it depends on the bank and how fast they operate, but it is much faster with the guaranteed, generally speaking.
Number 4 that we want to talk about is about the closing, no?
Oh, closing, closing, absolutely. With direct loan, it can be 30 to 60 days. This is still the normal processing time. So it just takes what do we mean by closing? How long it takes to hand you the keys once you've picked the house.
Exactly.
So with direct loan, it can take 30, which is a normal time, up to 60, which is still not unheard of. So, because, even banks these days take a while. What about for the guaranteed?
For guaranteed, basically, is going to take 30 to 37 days because you're going to the private. No, you're going to go to the bank.
Right. Also want to mention private banks can go as long as 45 days, generally speaking. Anyway, at least in the local area right now because of all of the appraisals and all of this fun stuff. So.
And also for guaranteed rate, 1 to 7 days takes for underwriting. What is underwriting?
What is it? That's where they make sure that all your paperwork matches, that you're going to get what it is, that you're getting the loan, and it takes the banks a bit to process that. What is number 5?
Number 5, you want to talk about the interest.
Interest rate, yes. With direct loan, it can be as little as 1%. So it can be a very low percentage. Again, the interest is based on your income. What about for guaranteed?
Well, and the guaranteed is negotiable, no?
Mm-hmm.
Between the lender and also the mortgager, which is you.
So I myself cannot negotiate. It's up to the lender.
Exactly.
Oh, okay. So it's not up to me, really.
But to be honest, many people, they don't know, but you can really, as a mortgager, you can negotiate the terms. And most of people, they don't think about it.
Okay, what is number 6?
Number 6 is subsidized, no?
Oh, subsidies. Okay, so with direct loans, what's really nice if you are a low-income person is that the government can subsidize your housing, which means that they are going to pay a portion of the mortgage. You are picking the house that you want, you're living in the house that you want, but your mortgage payment, let's just say you're getting this 2,000 square foot in Aiden for $260, and then your payment would be, how much would that be in a normal payment for $260?
Well, 260.
I hit him with the number.
Well, it probably is around $1,000 to $1,100.
Okay, so let's just go with $1,200 just because it's easy in my head. And then you get a subsidy where the government is going to pay $600 and then you pay $600. So really, at the end of the day, the subsidy really does help a lot of people who are in the lower income still get into a house. The subsidy does go on the back end of the loan, which is why it can be 33 to 38 years. So you are eventually going to pay the $600 or $600 that they're giving you as a discount when you have more money in the future. So they're putting it at the back end of the loan, which is nice.
Therefore, subsidies you cannot get it with guaranteed or with the bank.
Correct. So the bank is not going to give you a subsidy. This is only if you go through the government program. Number 7.
Number 7 is about the inspection, property inspection.
Okay, what is about guarantee with a property inspection?
Well, in the direct, you must get inspection and turn it to the government.
This is true. With direct loan, you must turn it in. But with the guaranteed, you don't have to turn it in. It's still recommended that you get a house, get your house inspected, but it is not recommended. It is not required. It is only recommended. With direct, it is required and you have to turn it in. And the inspection has to meet. So
what kind of inspection we are talking about?
5 different types. Well, it's really all goes with the general one, but it's going to be plumbing, structural, heating, electric, pest. Do they require, and then they can require these to get done. So, which I think is number 8, no?
Yes, that is going to be our number 8, because in number 8 that we're going to talk about.
I jumped into it.
The repair, no?
Yes, so with direct loans, they can require repairs. This could be something as silly as painting a fence on the outside. It can be something more serious, but they can require it. If it's new construction, they are still going to have inspections with direct. And yes, you can have brand new house built with direct loans. This means that they're going to inspect 3 parts. What 3 parts?
Therefore, that is crazy. With the new construction, we have 3 stage of inspection. First stage is basically initial footing.
Right,
concrete,
they pour the concrete.
When they put the concrete, that is your first inspection. What is the second inspection?
The second one is once they put the frame on the house, the wooden frame, they're going to then make sure that all the electricity is right and the plumbing is in the correct places. And so they're going in to look at the inspection then. And then what's the third one?
The third one, when the project or building the house was completed, again, you need the third inspection.
Which is the normal inspection that everybody normally thinks
Exactly.
of, where they're checking every socket and every ceiling and everything. Guaranteed, you should get it, but you're not required to get it.
Exactly. That is another point that you need to pay attention. Number 9, no?
Mm-hmm,
Number 9, we're talking about mortgage insurance or PMI, premium mortgage insurance.
Okay, so with direct, it is no mortgage insurance. With guaranteed, you do have PMI. So with direct, your income is very, very low. With the guaranteed, your income is moderate. So, and PMI, what is that?
Premium mortgage insurance, I said it.
Oh, okay. And what does that mean? It means that you have insurance. That means that you can cover your bank, that you can cover that you are making all your payments to the bank.
Therefore, basically in the loan like a conventional or the other type of loans, why you pay the mortgage insurance? Because if you are paying less than 20% of the sales price that you are purchasing, then the bank wanted to secure the loan that you paid you, and that's why they actually put their mortgage or premium mortgage insurance in your payment every month, no?
Yes.
And as soon as you hit 20% of the total price, then the PMI is going to be removed.
Right, so now number 11.
Number 10.
Number 10, down payment.
Therefore, basically, we're talking about targeting. What is the target for the direct loan? The direct loan is basically for those households that have very low income or low income.
No, you can have either way. it's 100% financing, so you can have 0 down payment for both of them, which is amazing. With the direct, it has to appraise at value, but it can only be by 1%. What about the guaranteed?
What about the guarantee? Is 100%?
It is guaranteed as well. So this is one of the best things people love about the USDA program is that there's 0 money down, no down payment.
Exactly. And I think we mix a little bit number 10 and 11. And the reason that I'm saying now,
I think we mix number 1 and 2.
that we want to talk about also when you are with a direct loan. Basically, the household that have a very low income and low income, they can apply for a guarantee. They can be moderate in income, and it depends on the local government where exactly you living,
right? And
based on the household of the 4 people in that household.
You pulled the Pitt County numbers though, no? Pitt
Yeah,
County is like Greenville, Winterville, Ayden. Greenville you cannot live with USDA, but you can unless it's the outskirts of Greenville, Winterville, Ayden, Farmville. Yeah, these are places you can. What are the income levels for these people?
For the 4 person in the household, the average
4 people, the average
very
family.
low income, they are talking about $33,350.
Right, which means I can go direct. If I'm 33,500, yeah.
And
50.
for low, they go 53,350,000.
Which means I can still be direct.
Yeah, and for moderate, 91,900.
Right, so that's actually opens it up quite a lot to a lot of people with the guaranteed loan. So what about that 38-year term? What's my
If you are talking about paying off your loan in 38 years, then we are talking about for 4% in a household for 40,000 annual income.
Now, this was based on our statistics that we ran right now. Numbers can change. USDA will put out new guidelines, so don't take this if you're watching this later than today as the direct and final answer. We're just telling you as it is right now when we made this video. So I just want to throw the disclaimer in there.
Number 12, we wanted to talk about the fee. What fees associated
with direct loans, you do have to pay $25 for your credit report, and all other fees are part of the loan, which is nice.
Which is really nice.
What about that guaranteed loan, though?
Well, guaranteed loan, basically, you are paying 1% of the whole amount of the loan.
Which is kind of what it generally is going when you're dealing with underwriting and all of that stuff from banks. So it's a bank fee of 1% of the loan.
And they might, on top of that, also charge you 0.35% for guaranteed loan too.
Oh, so we hope this video was helpful. If you have any questions about USDA loans, we can put you in contact with the right people if you don't want to hear from us. Because we only know Pitt County, but we can definitely point you in the right direction for everybody.
And we are here because we know all of the suburbs in Greenville and around the Greenville, and we are trying to help you to get as best that you can.
Yes, absolutely. We want you to get the best house for your money that you can, and we want to put you in that house. So,
and we are excited, and thank you for watching our videos, and have a wonderful day, guys.